Welcome back, students who are taking financial accounting, and we are working on the series for the Chapter 1 exercises, which are the Group B, and I'm just going to jump right into it, but remember you can always pause, rewind, and watch the video again in order to make notes or whatever have you, and if you still don't understand something, feel free to contact an instructor. Okay, let's get to it here. Right, exercise 1-25B, right, basic accounting equation. Candy's Candy started a business in 2014 with total assets of $50,000 and total liabilities of $40,000. And just looking at this exercise, this is very similar to exercise 1-24B, which was in the previous video. So if you want to go back and watch that one, if you haven't already, but it's looks to be the same as that one, except this one here is we're looking at assets and liabilities, which means we don't know what the equity is, whereas in 24B we didn't know what the liabilities were. Right? Anyway, so it says started a business in 2014 and had assets of 50,000, liabilities of 40. So if this is the start of the business in 2014, this could be any date. Okay, if the assets are 50,000 and the liabilities are 40,000, that means my equity is 10,000. And remember, to get that, assets equals liabilities plus equity. So if I have 50,000 is equal to 40,000 plus my equity, to isolate the equity, I move the 40,000 across the equal sign. So I have 50,000, and when I do that, I change the sign from a positive to a negative. So I have a negative 40,000 is equal to the equity. So 50,000 minus 40,000 is my 10,000 in equity. Okay. So that's when I start the business in 2014. Then it says here at the end of 2014, which is December 31st, 2014, the assets were 57,000. The liabilities were 8,000. So that means my equity is 49,000. Okay. And then it says, after analyzing the data, answer the following questions. What was the amount of the increase or decrease of the equity? Well, I started out with 10,000 and I ended up with 49,000, which is more, right? So I ended up with an increase of 39,000 in equity. And two possible reasons for the change in the stockholders' equity. Okay, so from, when you were looking at, and let me just jump back up. No, I'm not going to jump back up because I don't have an example of it. But in previous illustrations, you had your assets is equal to liabilities plus equity. And under the equity, you had common stock plus your retained earnings. Okay. So in identifying two possible reasons for the change in the stockholders' equity, well, one, the change could have been, since it increased 39,000, means we could have sold, common stock, all right, which would have increased our common stock. And the other thing that could have happened is, in relation to retained earnings, remember, on our income statement, we have revenues less expenses, which gives us a profit or loss. That profit or loss at the end of the accounting period is closed out to the retained earnings. Right? So if our retained earnings increases, which obviously increases our equity, that means we needed to have a profit on our income statement, meaning we had to have more in sales than we had in expenses, which gave us a profit. Well, that profit, when we close it out to the retained earnings, if retained earnings was 0 and it increased 39,000, okay, well, that increases my equity. So the two possible reasons are sale of stock and an increase in retained earnings, which is an increase in our net income, our profit. Right? Okay, 1-26B. Using the accounting equation to determine net income. Okay, so we're going to use the accounting equation to determine our net income. And remember, and now as I'm reading this, remember I'm thinking things in the back of my head. Assets is equal to liabilities plus equity. And the expanded accounting equation would be plus revenues minus expenses minus dividends. Okay, but in trying to figure out the net income, right, we don't need dividends. So we're only really looking at revenues and expenses, which gets closed out to our equity. It's part of the basic accounting equation. Right, so it says here the balance sheet data for Cindy's Office Supplies at October 31st and November 30th are as follows. Okay, so this is the information, and there's a question mark next to the equity here. The requirements. The following are 3 independent assumptions about the business during November. Okay, so if we have a timeline, and this is 10/31, okay, 10/31 is the end of an accounting period. So the ending balances on 10/31 become the beginning balances on 11/1 for the next accounting period, which ends on November 30th. Right? So it says here, the following are independent assumptions about the business during November. These are the assumptions. For each assumption, compute the amount of the net income or net loss during November. So this is what the question is asking me. It's asking me to compute the net income or net loss during November of 2014. Now, as a quick aside, I actually worked through this problem previously on another video and scrapped it because it ended up taking half an hour. If nothing else was written after this, meaning all of this stuff here, okay, was not included, right? I could have just ended the problem with those first 2 sentences, and I would have come up with the same assumption, right? Because of the thought process, right? But it continues on, and it says, find the solution by preparing the statement of retained earnings. First, use the amounts of total assets, total liabilities, and common stock previously given previously, and the accounting equation to determine the beginning and ending retained earning amounts. Right? Then plug those and the other amount given in each assumption into the statement of retained earnings to determine the net income or loss. So basically, it's telling you the procedure that you should be working through. Right? Now, me personally, what I ended up doing was just by giving this data and thinking about, filling in the back of my head the information, I actually worked through the problem without reading the requirements. But like I said, it took extra long, so I'm going to, because I ended up doing it again and again, because I did it in my head, and then I had the principles in my head, and then when I was trying to work through the problem, I was doing it a second time. So let me just kind of like go through this. It's telling us we need to compute the net income or loss for November. And it says, find the solution by preparing the statement of retained earnings. So I'm going to need a statement of retained earnings. Now, first use the amounts of total assets, liabilities, and common stock previously and the accounting equation to determine the beginning and ending retained earning amounts. As you see up here, we don't have those amounts. Okay, So what we need to do is we need to figure out what those amounts are. All right, so let's go ahead and do that. Right. The first thing here, we notice that we have assets, liabilities, and equity. We don't know what the equity is. So our accounting equation is this. Let's first figure out what our total stockholder equity is. All right, so for October, it's 127 is equal to 92,000 plus the equity. So it's 127 minus 92,000 because we're isolating the equity, and when we move the 92,000 across the equal sign, it changes the sign. So when we subtract 92,000 from 27,000, our equity is 35,000. Okay, so our equity here is 35,000. We do the same thing for November. We have 165 minus is equal to 119,000 plus the equity, or 165 minus 119 is equal to the equity, and we end up with 46,000 as our equity for the end of November, so 46,000. Okay, so now that is our total equity, but we're trying to figure out, our net income, and we're doing that through our retained earnings. Okay, well, we don't have retained earnings in this data. We have common stock, and we know up here, right, from the expanded accounting equation, that revenues less expenses get closed out, the net income gets closed out to the equity, right? Well, when it gets closed out to the equity, what's in our on the equity section of the balance sheet? We have common stock plus the retained earnings is what is shown on the equity section of the balance sheet. And remember, the statement of retained earnings is more of a detail of that equity, okay, of that retained earnings. So we have we have revenues less expenses, okay, which gives us a profit or loss, and that gets closed out to retained earnings. So the retained earnings plus the common stock gives us our total equity. So we need to first figure out our retained earnings, because that will tell us, the increase or decrease in our profit or loss, our net income. So if my equity is equal to my common stock plus my retained earnings, I have 15,000 in common stock plus my I have 35,000 for equity is equal to 15,000 for my common stock plus my retained earnings. So I isolate the retained earnings by going 35,000 minus 15,000. Remember, I'm moving it across the equal sign, so I change the sign, and that's going to equal my retained earnings. So my retained earnings is 20,000 for October. Okay, so 20,000 for October. Now, for November, we have 46,000 for earnings, 15,000 for common stock, plus retained earnings. So 46,000 minus 15,000 is equal to retained earnings. And so my retained earnings is 31,000 for November. Okay. Now that we've derived that information, we actually now need to start looking at our statement of retained earnings. And the format of the statement of retained earnings, if you had gone and looked in the chapter at the statements that were supplied, or if you watched the previous videos in the introduction, you saw that you had a beginning retained earning, and then you add net income, and then you less dividends, and then that all gives you your ending retained earning. Now, we were able to, it's asking us to compute the net income. Okay, so what we're doing is we're backing into the net income. I set up here, right up in here, okay, that October 31st, that was the end of the previous accounting period, which becomes the beginning of the next accounting period, all right? So our ending retained earnings of 20,000, right? Our ending retained earnings of 20,000 at the end of October 31st becomes the beginning retained earnings of the next period in November. So I have 20,000 here for my beginning retained earnings. Now, I don't know what my net income is. Okay, I don't know what my net income is. And then I have less my dividends. Okay, and I don't know what that is either at this moment in time. Okay, and then for my ending retained earnings, as of November 31st, my ending retained earnings was 31,000. Okay, so we need to compute. What we're looking for is computing our net income, right, based upon these three different assumptions. So we're going to do each assumption at a time, right? So the first one here says that the business paid no dividends. Okay, so if the business pays zero in dividends, all we're going to do is we're going to back into this net income. So let me do that here. I have my ending retained earnings of 31,000, and that's going to be equal to, because remember, this is a total amount here, all right? It's a total of these three. So I have 31,000 is equal to 20,000 plus my net income, right, minus my dividends, because remember, when we pay out dividends, we subtract out the dividends. Okay, so in this case here, in subtracting out the dividends, we have a zero in dividends. Okay, so now all we need to do is just isolate the net income. We take everything else and put it on one side of the equal sign and the net income on the other. So I have 31,000 minus 20,000. Remember, it changes the sign going across the equal sign, is equal to my net income. Zero and dividends is zero. So my net income in assumption A is 31,000 less 20,000, or 11,000 is my net income for assumption A. So the answer for my net income for A is 11,000. Well, now that we understood how to do that, right, what does B say? The business paid 7,000 in dividends. Okay, so sorry, I shouldn't have erased that. 31,000 is equal to, right, so it was 20. So in assumption B here, okay, it's now saying that we're going to pay $7,000 in dividends, right? Well, what changes as far as this is concerned? Well, our dividends are not zero anymore. They're 7,000 because we're paying them out. So our negative 7,000 becomes a positive 7,000, okay, which is equal to our net income here. And so when we do all of the math there, all right, 31 less 20 is 11. 11 plus 7 is 18,000 is now our net income, right, for assumption B, 18,000. This is going to end up being 18,000. Okay, 20 plus 18 less 7 gives me the 31, right? 20 plus 18 is 38, less 7 is 31, right? All works the same way. So that's B. Now let's look at C, and it says the business paid 15,000 of dividends. Okay, well, this is, paying a dividend is paying a dividend. It's just changing the amount. So instead of having 7,000 here, right, we have 15,000 instead. So instead of having 7,000 here, we have 15,000, which means now we have a positive 15,000 here. So 31,000 less 20,000 is 11,000, plus 15,000 gives us 36,000 as our net income. Okay, so that's it for this problem. Again, it's just a matter of understanding the underlying concepts and applying to the situation. Okay, I know what my I know what my accounting equation is. Assets is equal to liabilities plus equity, and I know that equity is made up of common stock and retained earnings, and I know that retained earnings is made up of my profit or loss from my income statement, which is my revenues less my expenses. Okay, that's the concept. So when I go to apply it, one, I'm taking my assets, liabilities, and I'm figuring out what my equity is. And when I can figure out my equity, if I know what my common stock is, that allows me to figure out my retained earnings for October. And I do the same thing for November. Assets less liabilities gives me equity. Okay, total equity. I take my total equity less my common stock, which then gives me my retained earnings. So I have retained earnings for October, which is the end of October, which is the beginning of November, right, up here, right? The ending figures for one period become the beginning figures for the next period. And I know what my retained earnings are for November 30th. So when I create my statement of retained earnings, I always start out with 1, my beginning retained earnings, 2, I add my net income, 3, I subtract dividends, and 4, that gives me the total of those 3 gives me my ending retained earnings, right? Well, we don't know what our net income is here, right? But we do know the other figures. I mean, remember, simple math. If you know 2 out of 3 things, you can always figure out the third. Well, in this case here, I have 4 variables. If I know 3 of them, I can figure out the fourth, right? So I have 20,000. My assumptions are telling me how much my dividends are, and I know how much my ending retained earnings are. So by using those 3, I can always figure out that fourth item, which in this case is the net income, and you saw me do all of the math in order to get the answers: 11,000 for A, 18,000 for B, and 36,000 for C. Okay, so pause, rewind, watch the videos again, go back, and if you don't understand a concept at this point in time, I mean, if you've been watching the videos, you read the book, you've been watching the videos, and you've been doing the problems, you really should already be familiar with all of these here concepts because I've repeated them several times. But if you're just, if you are watching this video the first time just because you're looking, you got, exercise 1-26B incorrect, and you want to see how it's done, hopefully you understand the underlying concepts, you understand the relationships. If not, then my suggestion is to go back to those introductory videos and watch those in order to pick up on the concepts that you missed. Okay, so with that, I will see you in the next video for the next problem.